The secret to success when investing for retirement may actually be pretty simple, even boring. Carrie Hannon joins us now to explain why passive investing has proven to be a winning strategy. Carrie.
Yeah, hi, Brad. Well, the proof is in the pudding, I like to say. These index funds regularly clobber actively managed mutual funds year after year. Yes, there's a percentage that does with actively managed accounts that do fantastically well. But the bulk of them, roughly 80% or so, outperform, the index fund is outperforming the actively managed fund. So we're talking about the S&P 500 index and broad-based indexes that track a certain basket of stocks or bonds. And so, I'm a big fan of index funds for retirement accounts because the costs are lower. Number one, that's a huge point. They're managed by computer. You don't have the active management fees of trading in and out of different securities. They're super simple. And if you can just, balance across a basket of stocks, equities like the S&P 500 index, and some index bond funds, you're set. And when the markets go a little haywire, you don't have to panic. You've got some diversification right there in front of you. And in fact, Warren Buffett has even said, a few years ago in one of the annual meetings at Berkshire, he said, hey, for most people, owning an S&P 500 index is the way to go. It is super simple, and just year after year, they clobber the actively managed funds. Yeah, it's a little boring, but I'd rather go with boring. And the fact is, Brad, most people actually do own index funds, and they're target date based retirement funds. So say you have a target fund in your 401k plan that you've set, I'm going to 2044, say. That account, that target date retirement fund is made up of index funds. So you're already an index fund investor. But, I just think year after year, we have multiple studies. And I wrote this story just now because two new studies have just come out highlighting this actual return thing. So, I think it's worth throwing it out there. It doesn't mean don't invest in other things, but for retirement savers and even retirees, this is a really steady Eddie way to go.
Carrie, thank you so much for breaking this down. Appreciate it.
Thanks.